In 2020, the market capitalization of MicroStrategy, a company, was less than $22 billion US. 5 years later, it has doubled by about 80 times. From obscurity to the most beautiful boy on the tour, MicroStrategy relied on Bitcoin in one hand and leveraged in the other to become the new king of stories in US stocks, and the limelight even surpassed NVIDIA. We all know what happened next. With Trump's strong return and the price of Bitcoin continuing to soar, foreign media predicted that Michael Saylor might press Musk to become a trillion-dollar millionaire in the future. What kind of company is MicroStrategy? Why dare all in Bitcoin? What is its stock price and Bitcoin operating mechanism? Look at what's behind this big bet. Is it the next NVIDIA or the second Enron?
MicroStrategy.
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 MicroStrategies.
MicroStrategy.
MicroStrategy.
MicroStrategy, Nasdaq, MSTR, founded in 1989, started as a tech company focused on developing business intelligence (BI) software. In 2021, its revenue was around $500 million, but growth has since stalled. Its Q3 2024 revenue was just $116 million, down 10.4% year over year. By all accounts, a company like this should have faded into obscurity. But in 2020, MicroStrategy pulled 180-degree plot twist. CEO Michael Saylor announced the company would adopt Bitcoin as its primary reserve asset, branding itself the world's first Bitcoin Treasury Company. From that moment, MicroStrategy transformed from a mundane software firm into the ultimate Bitcoin player. As of May 2025, it holds approximately 560,000 Bitcoin, worth nearly $59 billion, forming the core of its balance sheet. MSTR's stock price is not tightly correlated with Bitcoin's movements, all while carrying a hefty $4.6 billion in debt. It's a downright high-leverage gamble. How did MicroStrategy pull off this audacious move, convincing Wall Street with rhetoric and amassing 560,000 Bitcoins? The mechanics are surprisingly straightforward. A textbook case of leveraging traditional finance to bet big on a new finance asset, Bitcoin. Step 1. Issue stock to raise cash. Through multiple rounds of stock offerings since 2020, MicroStrategy has raised significantly capital. Nearly all of it went straight into buying Bitcoin, fueling a surge in its stock price. Step 2. Issue convertible bonds for low-cost financing. Beyond stocks, MicroStrategy issued convertible bonds with ultra-low, sometimes 0% interest rates. These bonds allow holders to convert them into stock later. Saylor capitalized on Bitcoin's FOMO, raising billions at minimal cost to keep buying Bitcoin. Step 3. Go all in on Bitcoin, hold long-term. The funds weren't for trading, but for buying and holding Bitcoin long-term. Saylor has repeatedly proclaimed on social media that Bitcoin is digital gold, an unpredictable decentralized asset. His logic is simple. If Bitcoin rises, MicroStrategy's asset value rises. If Bitcoin falls, so does the stock price. This is equivalent to turning MicroStrategy into a super leveraged Bitcoin ETF. For example, if the price of Bitcoin rises to $120,000, the value of the 560,000 Bitcoins it holds will soar from $59 billion to $68 billion, and the book value of assets will increase by $8.5 billion. Moreover, by observing that the MSTR stock price and Bitcoin trends are very similar, is this a sign of living and dying together with Bitcoin? Doesn't it sound a bit like Luna in 2022, which also relies on the dual currency spiral to support its huge market value? On one side is the rise driven by faith, and on the other side is the hidden danger of high leverage. The question is this a big risk? How does debt pressure work? For retail investors, buying MSTR stock seems like an easy way to gain Bitcoin exposure without directly trading crypto. But it's not that simple. Retail investors face dual risks. Bitcoin price volatility. If Bitcoin's price dropped 50%, MicroStrategy's 560,000 Bitcoin would plummet from $59 billion to $29.8 billion, potentially slashing the stock price in half. Debt pressure. $4.6 billion debt is no small burden. A shift in market sentiment could trigger a liquidity crisis. Worse still, Wall Street's investment banks and short sellers aren't sitting idle. They have securitized and packaged MicroStrategy's debt risks through derivatives, passing them on to retail investors. If the market crashes, retail investors could end up as the final backholders. If MicroStrategy is viewed as a game, then retail investors are the participants who enter the market, and institutions are the movers who control the rhythm. To get out of this game unscathed, institutions must maintain the strength of the stock price in order to complete a safe shipment. At present, there are two possibilities. Breaking through previous heights, institutions could push MicroStrategy's stock price to all-time highs of $445 to $543 or even higher, shipping at high levels during the height of market sentiment and making huge profits. Paper profits could be as high as $21 billion. But the problem is, the market liquidity is insufficient. Once the chips are liquidated, it may trigger an avalanche of stock prices, and the derivatives market, under the FOMO sentiment of retail investors, may be liquidated. Box oscillation, slow delivery. A more stable way is to let the stock price fluctuate at a high level, and institutions release ships in batches during this period to avoid market panic. This method is more suitable for the current macro environment of high US dollar liquidity and is also conducive to maintaining the high price of Bitcoin. Retail investors are chasing highs, while institutions aim to exit. The future of MSTR stock and Bitcoin's trajectory hinges on this tug-of-war between bulls and bears. If the above two methods are true, then in the future, the US bond yield, especially the 2-year yield, may have a narrow range trend, so that the price of Bitcoin will remain high and volatile, which is convenient for institutional shareholders to ship safely. However, if external risks, such as an unexpected surge in US Treasury yields, global economic turmoil, intensified geopolitical risks, etc., trigger market panic, there may be a wave of stampede-style declines. MicroStrategy's game may also end up taking a sharp turn for the worse. MicroStrategy's operation can be called traditional finance meets new trends, epic turn. From a niche software company to Bitcoin's #1 player, it's not only completely overturned the traditional logic of corporate financial management, but also become a collision between retail investors and institutions, faith and rationality. It puts the spotlight on crypto's potential by raising questions about market bubbles and financial risks. Will MicroStrategy become the next NVIDIA, soaring on the wings of opportunity? Or will it crash like Enron, undone by runaway leverage? The outcome remains uncertain. What do you think? Is MicroStrategy the future of crypto or brewing the biggest financial bubble of the 21st century? Share your thoughts in the comments.